Choosing the right strategy. Before you buy or sell options, you need a strategy. Understanding how options work in your portfolio will help you choose an option strategy. Choose the right strategy. A benefit of options is the flexibility they offer. They can complement portfolios in many different ways. It's worth taking the time to identify a goal that suits you and your financial plan. Once you've chosen a goal, you'll have narrowed the range of strategies to use. As with any type of investment, only some of the strategies will be appropriate to your objective. A particular strategy is successful only if it helps you meet your investment goals. All right, for example, if you hope to increase the income you receive from your stocks, you'll choose a different strategy from an investor who wants to lock in a purchase price for a stock they'd like to own. Start simple. Some option strategies, such as writing covered calls, are relatively simple to understand and execute. Complicated strategies, such as spreads and callers, require 2 or more opening transactions. Investors often use these strategies to limit the risk associated with options, but they may also limit potential return. When you limit risk, there is usually a trade-off. Simple option strategies are usually the way to begin investing with options. By mastering simple strategies, you'll prepare yourself for advanced options trading. In general, more complicated option strategies are appropriate only for experienced investors. Stay focused. Once you've decided on an appropriate option strategy, it's important to stay focused. Now, that might seem obvious, but the fast pace of the options market and the complicated nature of certain transactions make it difficult for some inexperienced investors to stick to their plan. If it seems like the market or underlying security isn't moving in the predicted direction, it's possible to minimize your losses by exiting early. However, it's also possible to miss a future beneficial change in direction. That's why many experts recommend that you designate an exit strategy or cutoff point in advance and hold firm. For example, if you plan to sell a covered call, you might decide that if the option moves 20% in the money before expiration, the loss you'd face if the option were exercised and assigned to you is unacceptable. If it moves only 10% in the money, you'd be confident that there remains enough chance of it moving out of the money to make it worth the potential loss. We would like to thank you for taking the time to watch the videos that we have put together for you today. Take a look and subscribe to our YouTube channel, our Instagram, our Facebook page, and reach out if you have additional questions. We would love to hear from you. Check out our website for more information. Go to www.optiontradersnetwork.com. Thanks so much.